On the program today, World Bank announces Ajay Banga as sole nominee for position of the bank's next president. And Egypt's central bank hikes interest rate to tackle rising prices. Ghana lawmakers to vote on new tax bills to rake in $340 million. Hello and welcome to the last edition of Business Incorporated this week. I'm Will Ibang. As always, let's check in on the markets. We begin with Africa, where equities traded with positive sentiments at intraday. Well, mostly positive sentiments because Nigeria's NGX is still going strong, it was trading 0.80% up at intraday. And on the flip side, we saw the GSE in South Africa dropping by more than 0.5%. Elsewhere, if we look at the EGX 30, which was closed on Thursday, for the week, it was in positive territory, however marginal. Well, Kenya, however, closed yesterday's session down 0.66%. Now let's see what's happening at the NGX. We're going to be digging and seeing what stocks are moving the markets while it is up strongly. We're going to be speaking to Chinazom Izora, equity trader at Parthian Securities. Good afternoon, Chinazom. It's good to have you on the program.
Thank you for having me.
Chinazom, the NGX, the ASI is really strong at intraday, 0.8%. I'm sure probably by now, I don't know what the numbers are telling, but what is driving stocks? What's driving sentiments in the market at the moment?
Okay, so right now, it's still up. It's up at 0.7%. And what's driving the market is actually dividend declaration. So corporate actions, we've seen more stocks releasing their results. So there's positive sentiment for that. There's investors taking positions to qualify for some of those actions. And of course, we're also seeing profit taking. So beginning of the week, the market was down. Investors that purchased at low prices are exiting those positions to take the profit. So that's also part of what's driving the market this week.
So what particular stocks at the moment are investors eyeing in the stock market right now? What stocks are they buying? What's moving the volume?
So there has been a lot of movement in Rwanda. As we know, yesterday, Rwanda announced that they've submitted an application to SEC to acquire the shares of the minority shareholders. So just yesterday, we saw Rwanda's share price move by 10%. Today, the movement hasn't been quite as much, but there's still a lot of buy interest in Rwanda. We've also seen a lot of movement in Transcorp, Fidelity, UBA, and Zenith Bank and GT have also seen a lot of movement. And that's because of the dividend declaration in Zenith. I expect a lot of investors are expecting to see the same with GT, though the GT numbers have not been released just yet.
So if we talk about the earnings that have come in, has there been any disappointing numbers to say that investors might move to the fixed income market, seeing that yields for the long-term NCB bills are up to the 14% levels? Do you think they'll be rebalancing their portfolios?
Well, so Nigeria is still dealing with really high inflation. And historically, nothing fights inflation better than equities. And you know, this year we have an incoming government, so there's still a lot of uncertainty. There's going to be investors watching to see what's going to happen in the next couple of months to actually know whether they should move to fixed income or to stay in the equities market. But right now, I think they are just enjoying the results they've seen. The banking stock results have been really good. The question now is if we can expect to see the same positive results in Q1, considering the cash issues and inflation and the MPR that's been adjusted. So that's going to be interesting to see. And we're going to see that in the months of April and May.
We'll definitely look forward to the Q1 numbers. But before I let you go, very quickly, is the market going to close in the green or is it going to be in the red?
So you're asking me to make a prediction, and you can never really say with the market. Right now it's positive, but anything can happen before close of market.
Thanks so much, Mizora, equity trader, Pattern Securities Limited, for sharing your insights with us.
Thank you for having me. Have a good day.
Now we slide to the Middle East, where most major equities the markets were closed on Thursday, except in the UAE, and stocks are trading lower at intraday. Abu Dhabi 0.36% down, Dubai also more than 0.5% down, and still within the region we saw Saudi and Qatari that were closed on Thursday, that's yesterday, in negative territory. Now the president of the European Commission, Ursula von der Leyen, has called for a tougher stance on China. In an unusually scathing speech, she implied that the EU could rethink its trade relations with the country. It could mark a turning point in the country's relationship. For more on this, I'm joined by Mary Sina in Berlin. Mary, what prompted this rethinking of EU-China relations by the Europeans?
Yeah, it seems like Europe is at an inflection point in its relations with China. In her speech, von der Leyen stated that Europe needs to be bolder, and that's because China, according to her, is becoming more repressive at home and more assertive abroad. Now, in her speech, she mentioned China's relations with Taiwan and its human rights violations as reasons for this change of heart. But really, this scathing speech was prompted by China's relationship with Russia. The Chinese and Russian leaders met in Moscow last week, and that has raised alarm bells. Europe is concerned that China could send weapons to Russia for its war in Ukraine. And on the one hand, that would, of course, escalate the conflict on the ground in Ukraine. But on the other hand, it would also be extremely destructive to the already fragile international order. And basically, von der Leyen demonstrated in her speech that Europe will adopt a more pragmatic view on China from now on, where it focuses on China's concrete actions rather than on what Europe hopes China will do.
So what exactly did von der Leyen say in her speech?
In her speech, von der Leyen said that the EU will reassess the comprehensive agreement on investment in China, which is a trade deal that's on the table between the two parties. And she also called for a de-risking of the EU's relationship with China. Now, what does de-risking mean? It means that the EU will restrict trade to China in highly sensitive technologies. So it won't export technologies to China that it could use for its military operations, for example, or for human rights abuses. Now, that statement signals that Europe is ready to use economic tools to rein in China diplomatically. That's a big step. And it also shows, on the other hand, that while the EU's approach is increasingly assertive, it's still different to the approach of the US, because the US has called for a complete decoupling from China in a lot of trade areas. So there's some moving closer to the US approach, but it's still quite different.
So what's the European markets looking like today, anyway?
Yeah, it's the last day of trading in March, and I'm sure traders will be glad to see the end of the month. Even though the year had seemed to start well with a rally, March has really been a rough month for the market. European stocks were tracking their worst March since the pandemic-fueled crash in 2020. And this slump in March was driven by new worries about a recession and rising interest rates by central banks. Now, investors are heading into April with a slightly more positive frame of mind, and that's because we're seeing better than expected growth figures in the UK and slowing inflation in France, Germany, and Spain.
Thanks so much, Marie, for that update. Now we'll move on to other markets, where in Asia Pacific, markets traded higher on Friday as technology stocks continue to see renewed interest and led gains on Wall Street, with some shaking off concerns of a further banking crisis. Investors also looked ahead to the U.S. Personal Consumption Expenditure Price Index, the Federal Reserve's preferred measure of inflation, which is slated for release later in the day. In Japan, the Nikkei 225 rose 0.98% to 28,041 points, and the Topix index rose 1.02% to 2,003 points. Tokyo's inflation prints continue to show lower levels from its recent peak of 4.3% seen in December. The S&P ASX 200 in Australia rose 0.78% to close at 7,177 points. South Korea's Kospi also rose 0.9% to end its session at 2,476, while the Kosdaq fell 0.35% to 847 points. The Hang Seng Index in Hong Kong, however, paired earlier gains and last traded 0.45% higher in its final hour of trade. Now, the Hang Seng Tech Index also rose 0.92%. Now, U.S. stock futures were in positive territory early on Friday ahead of key inflation data. Dow Jones Industrial Average Futures was up by 0.43%, S&P 500 up more than 0.5%, and the Nasdaq Futures climbed 0.73%. Now let's check out how these stocks performed yesterday with Maria Bird.
The U.S. stock market moved higher on Thursday as the Dow Jones was up by 0.43%, the S&P 500 up by 0.57%, and the heavy tech Nasdaq up by 0.73%. This is clear that investors were ready to round out the first quarter on a high note. This is all in preparation for April's reviews by clients, as many portfolio managers are preparing those and making sure that they are ready for clients' reviews and that they show a positive note for the first quarter. This is all indicative of what might be the beginning of the second quarter on Monday.
Now, oil prices climbed in early Asian trade on Friday as sentiment was boosted by an expansion in factory activity in China, the world's second largest crude consumer, and as concerns grew about Middle Eastern supply. Brent futures, which have risen nearly 6% this week, were up 15 cents at $79.42 a barrel. U.S. West Texas Intermediate crude rose 17 cents to $74.54, having gained about 8% this week. Industrial activity in China has become a key determinant of prices in recent weeks following its ending of coronavirus-related restrictions amid weaker global demand. Oil prices are set to cap a second straight week of gains after the largest bank failure after the 2018 financial crisis spooked traders and world markets. Markets are now waiting for U.S. spending and inflation data due later today and the resulting impact on the value of the U.S. dollar. Now, gold prices edged up on Friday en route to their best monthly performance since July 2020 as the recent banking system crisis led to expectations of a less aggressive U.S. Federal Reserve, making bullion an attractive bet. Spot gold was up 0.1% at $1,981.59 per ounce. U.S. gold futures rose 0.1%. Spot silver, however, was flat at $23.87 per ounce. Platinum was also sluggish at $986.12, while palladium fell 0.5% to $1,457.39. Welcome back. Now, in recent days, nationwide protests over cost of living and President William Ruto's government have overwhelmed the country. Thousands have joined marches called by opposition party against high living costs and alleged fraud in last year's vote. The government has called for the protests to stop. However, the damage to businesses, both in terms of fiscal destruction and the economic standstill that resulted from these protests, could present a challenge to the government. Matt Kindiger, practice leader, Sub-Saharan Africa Frontier View, joins me. Good afternoon, Matt. It's good to have you on the program. Matt, how long are these protests likely to last for?
Hi, well, thank you for having me on the show today. So that is a good question. We are likely to see these protests continue over the coming weeks and maybe even months. There is a regular schedule of protests currently scheduled in the country, and so we would expect there to be some disruption, certainly well into April. But fundamentally, our view is that the protests are going to struggle to change government policy, and also addressing the big elephant in the room, which is the question of, or accusations of, fraud in the election, which is difficult to verify. And this means that the election is unlikely to be overturned. So we expect Mr. Ruto's government to remain in seat, unlikely to make significant policy changes. And this does mean that the protests will likely peter out over the next couple of months. You know, certainly some risk of disruption, but probably going to see a bit of an easing going forwards. Having said all of this, there is going to be quite considerable uncertainty, especially businesses that are most vulnerable to what's going on at the moment.
Speaking of businesses and vulnerability, how disruptive will the protest be on Kenya's economic growth this year? We're seeing that the Private Sector Alliance has said that each day of the protest, the aftermath costs about 3 billion Kenyan shillings. How quickly do you think Kenya is going to be able to recover from this?
Yes, so the crucial question is how long these protests go on for. So the longer the protests go on for, the more disruptive they are. Certainly, we will be downgrading our growth view for Kenya's economic outlook this year. We have already downgraded our growth view for Kenya before these protests started, and this is because the country is struggling with foreign currency shortages. It's also facing higher inflation and quite significant fiscal pressures. The government's finances are not in great shape. Having said all of this, assuming that the protests actually come to an end relatively soon, the Kenyan economy does have a track record of bouncing back from periods of social unrest quite quickly. Kenya enjoys a very broad-based or an increasingly diversified economy. We are seeing very resilient activity, or we had seen at least until the protest started, in services. So in particular, ICT, financial services, healthcare, education, even hospitality doing quite well. Provided that the protests end relatively quickly, we are still expecting to see the economy deliver about 4% growth this year. However, if the protests do continue, we're probably going to be downgrading this closer to 2 or 3%.
More downgrades for the country, but to what extent has the shilling's recent sharp depreciation been linked to the protests?
So I would say only partly. Certainly, social unrest in Kenya is likely contributing to the depreciation of the shilling in global currency markets. It's creating a bit of investor anxiety. But in our view, this recent depreciation of the shilling, especially against major currencies like the dollar, is a result of much more long-standing fundamental macroeconomic challenges that the country is facing. Our view is that the Central Bank of Kenya has been trying to control the currency's value and intervene into the currency markets in Kenya, and this is for a number of reasons. One is to limit inflationary pressures, especially in terms of imported inflation. The other is to contain the government's debt servicing costs. The government's fiscal position is not great, and it is very vulnerable to a rise in the cost of servicing debt in dollars, especially in dollar-denominated debt. This has not really become sustainable in our view, however, and the central bank is relenting to pressure because of very extreme foreign currency shortages that have emerged, and that is also really damaging business. So it's a combination of what's happening immediately, but also some longer-standing trends where the central bank had previously resisted depreciation of the shilling. We are expecting the shilling to average close to 140 against the dollar this year, probably ending the year between 140, 150, and maybe even 160 by December.
We do hope the hardship, the current crisis in Kenya is abated very quickly. Matt, thanks so much for joining us. Matt Kiniga, Practice Leader, Sub-Saharan Africa, Frontier View, for your thoughts on the program.
Thanks for having me on the show.
Now, the leadership of the World Bank is set to change as the financial institution announces U.S. national and former MasterCard Chief Executive Officer Ajay Banga as the only nominee for the position of the bank's next president. In a statement, the World Bank Group confirms that the period for submitting nominations for the position of the next president of the World Bank Group closed on Wednesday, March the 29th. The bank adds that a formal interview will be conducted with the candidates in Washington, D.C. in accordance with established procedures and expects to conclude the presidential selection in due course. Now, the Central Bank of Egypt has raised interest rates in its second meeting of the year, a move that has been widely expected by analysts after annual inflation soared to a new high last month. The discount rate was raised by 200 basis points to 18.75%. Egypt's annual inflation rate climbed, to 32% last month, up from about 26% in January. The country's economic woes have been compounded by Russia's invasion of Ukraine last February, resulting in supply chain issues, higher import costs, and a foreign currency shortage. And after a series of currency devaluations, the Egyptian pound has lost nearly half of its value against the dollar. Now, Ghanaian lawmakers are set to vote on new taxes to rake in an additional 3.96 billion cedis. That's about $340 million in revenue this year, and satisfy a key requirement by the International Monetary Fund to approve a $3 billion bailout. The country's hung parliament is scheduled to deliberate bills to increase some income taxes, company taxes, as well as the excise duty on cigarettes and various alcoholic and sweetened beverages. The revenue measures come after a rare move to restructure local debt. Also, earlier this week, policymakers raised the benchmark lending rate to a record 29.5% to curb inflation that rose 53% in February compared to a year earlier. The move is set to further increase borrowing costs for households and businesses. Now, the South African Reserve Bank's Monetary Policy Committee has hiked interest rates by 50 basis points to 7.75%. Economists were expecting an increase of about 25 basis points. Three members of the Monetary Policy Committee voted in favor of the 50 basis point hike, while two wanted a 25 basis point increase. The latest hike brings the prime rate to 11.25%, the highest level since 2009. The Reserve Bank Governor Lesetja Kyangyo says that the inflation pressures remain a risk and that load shedding is pushing up the cost of living.
The rand has generally weakened over the past year. Recent weeks have seen further sharp depreciation and then some reversal as sentiment shifted abruptly in the wake of policy decisions in some major advanced economies. The implied starting point for the rand forecast is 18 rands 6 cents to the US dollar, compared with 17 rands 32 cents at the time of the previous meeting. Currency markets are expected to remain volatile. While headline inflation eased in major economies in December, price pressures remain clearly evident in measures of core inflation, services, and wages. In the G3 economies, consumer prices rose by 7.5% in 2022. Our estimate for inflation in the G3 is higher at 4.2% in 2022 and 2.1% in 2024, and is unchanged at 2% in 2020.
And from South Africa and back in Lagos, that's how we wrap up this edition of Business Incorporated today and for the week. Remember, you can always catch up with us on our YouTube channel. I'm Will Ibang. Thanks for watching and see you next time.